In this video, you will find out why most traders fail and how to avoid those mistakes. This concerns all new traders, but also those of you who have been trading for a while. If you're one of those experienced traders, then you will recognize yourself in what I'm going to be talking about. And if you're just starting out in this business, then you will see what to look out for, how to avoid such mistakes, and therefore this will save you a lot of time and money. So let's get into it. Before we continue, make sure to subscribe to our channel and ring the notification bell so you can get notified every time we upload another video like this one. As you can see in the title of the video, there will be another part with another 5 reasons, and that's not something you want to miss out. We are going to start off with the first reason, and that's the wrong idea that traders have about the market. I'm talking about the perception of what the market is before they have even placed a single trade. Because that wrong perception will lead to many mistakes once you start trading. I mean, it's not the trader's fault, the one who opens a live account expecting to make money straight away, but it's those people out there on the internet spreading around wrong information promising you to gain big profits in a short period of time, making you believe that you can buy a single trading algorithm that will make you money while you sleep. Most of the time, what happens is a big percentage of your account will be blown away and you will have to withdraw whatever is left in it. But instead of that, they're still promising to make you 100% return in a week or something like that. Also, you can get false information from a certain brokers, and that normally happens with the unregulated ones. Sometimes you get a call from them saying that there is an amazing opportunity on a certain instrument and you should invest as much as you can so you can make loads of money. What you need to do then is to ask them if they're regulated and by who. And also make sure to ask them how did they get your information on the first place, because if you haven't contacted them before, then it's against the GDPR law for them to get in touch with you. From then on, they shouldn't bother you anymore. And I mean, it even happens now when I get a call every now and then, and as soon as I ask them a few questions, then they're never able to answer. And they know straight away that they're talking to someone who knows his stuff. Regarding the false information on the internet and the trading robots that a lot of people are offering, I would advise you to always have something on mind and do your own research. Most of the time, this information looks unreal, and it actually is. So feel free to get in touch with us or anyone else for a second opinion so you can be sure if you're making the right choice. This is pretty much the first reason, wrong perception of what the market is and how it works. But in many cases, this first reason could be the most expensive one, because before we get burned, we are willing to invest literally all of our savings on something just because we've heard somewhere that it will make us a lot of money. And that's why people are actually losing money, because they have unrealistic expectations. Since you're still watching this video, then maybe you've been through something like this, or you've been skeptical about something like this. Now let's carry on with the second reason. And that is trading without the right preparation. And that relates back to the first reason, the unrealistic expectations, because if we know what to expect, then we would prepare before we actually start trading. We would have a specific plan, we would be gaining knowledge all the time, and we would try to understand the market. I mean, you have to be looking at trading as a separate business, or at least that's what the pro traders does. No one should ever start a business or invest money before doing a little research on what are the possibilities, in what exactly are we investing, and who are we going against in this market. So we should start trading only when we've done our homework. To a certain point, this step is a bit more difficult as there is a ton of information about all that. But like I've already said, most of it is false information. So it's very important that you choose your sources of information wisely. You should know from who you're finding all the information that you need and how are you going to build your trading plan. Prepare for the market and have a systematic approach with your trading. That's what the real trading is. To be honest, this could also cost you money because trading without preparing, basically doing all the things that I just mentioned, might end up with a blown out account. What a lot of people tend to do is to try and learn how this business works with a live account. I wouldn't suggest doing it because you could wipe out a few accounts before you actually learn how to be consistently profitable. The best advice I can give you at this point is to spend more time on preparing and learning about the market rather than trading without the right knowledge. The third reason is for those of you who are already trading but are very emotionally involved. In this step, having the right preparation and knowledge could help, but it doesn't matter how much time it goes by and how much we have prepared, those emotions will always affect our results in a negative way. This is the psychological side of trading, and it's something that will stick with us throughout the whole process. Each one of those points that you see on the screen could cost you money, and it certainly will, especially if you're just starting out. For those of you who already have some trading experience, I'm pretty sure that you know very well what I'm talking about. I mean, it has happened to me as well, and not just once but many times. The first one is greed, and that's when we want to make big profits quickly. I would say this is the first stage that everybody goes through, and that's based on those false advertising on the internet. You've heard that you can make big returns in a short period of time, and that makes you greedy. Usually, what follows then is fear, because what will happen is when you become greedy, you will lose a lot of money, and that's when fear comes. At this stage, you will be too cautious with your trades and you will miss out some great opportunities. I mean, you could be looking at a potential setup, but because you're worried not to lose again, you won't get involved, and this setup could turn out to be a big winner. I think one of the worst mistakes is revenge trading. If, for example, price hits your stop loss on a certain currency pair or an instrument and you want to enter again on the same instrument that you just got stopped out because you want to make your money back, I'm pretty sure that those of you who have been trading for a while know what I'm talking about. And those of you who haven't, once you start trading, then I want you to ask yourself, how are you feeling and are you going through any emotions when you're trading? And I'm saying this because normally if you're not feeling comfortable and there's a lot of emotions involved, then you probably shouldn't be trading at this moment. Trying to revenge trading with the purpose of getting your money back could end up very badly for you, especially if you're trading against the market direction. Same as for the high self-confidence. I mean, just because we've had a few winning trades in a row or we've just closed out a big winning trade, that doesn't mean there won't be losing trades anymore. The market could very quickly bring you back to earth by taking all of your profits back, and in some cases even more. It has happened to me not once, and it was usually when I was trading during high volatility news in the early morning hours, basically the Australian and New Zealand sessions. And sometimes I've managed to make big returns before the working day has even started. And that was boosting my confidence through the roof. And then the next thing I know, by the end of the day, I've given all the profits back to the market. So I've been through each one of these emotions, and now I could say that they don't affect me that much because, like I said, I know what is the outcome, and so I managed to control myself. I would say that everyone who's reached consistency in their trading finds out a lot about themselves in the process, and now they pay attention to what emotions they go through on a daily basis. The next thing is the impatience. We kind of talked about this in revenge trading and the self-confidence, but basically what I mean is not being patient enough to wait for the right setup. That's when we have a trading plan, set of rules that tells us when to enter a trade, but we still try to enter a trade earlier before the rules has been met. And also when you're in a trade and you can't wait for your position to reach your target level. Let's say you have 10, 15, 20 pips of profit running and you close it straight away. But at the same time, whenever your trade is in the opposite direction of where the market is going, you don't close out your position. So impatience when it comes to entering a trade and impatience when it comes to closing a trade as well. And of course, the euphoria that comes with the big winners. That leads to taking irrational decisions and something that could sabotage your trading in a big way. So if that hasn't affected you yet, then it most probably will. So you have to control yourself because, like I said, each one of these emotions could cost you a lot of money. My advice is that when you start trading, if you feel like you're entering a trade based on emotion, then don't do it. You might as well close the platform, go for a walk to refresh your mind, and then come back to trading, even if this is on the next day or next week. In most cases, this will be the best decision that you can make. The next reason is one of my favorite, and that's overtrading. What do I mean? Well, most people think that the more they trade, the more profits they make. And that's definitely not true. We have this wrong perception because we've heard that hard work brings more money. The more we work, the more money we make, right? And that's why there are people out there looking for a second or third job just to make more money. Well, that's not the case in trading. And trying to trade more just so you can make more money will most probably end up in a big loss. According to my experience and the statistics from the people we work with, in most cases trading more means losing more. Why is that? Well, if let's say you're looking for a certain number of trades per day, for example 5. 5 trades per day is a lot, at least for my style of trading, and that means you will have to be trading on the lower time frames. Therefore, you will have to deal with a lot more market noise. You will have to use tight stop losses, which means you will be stopped out more often. Let's say you make $100 with those 5 trades. Well, if you spend all that time looking for just one decent trade, you can then make twice as much with one trade only, because this will be the better trade. So all that time that you will spend every day to look for those trades will be emotionally exhausting, and the fact that you will have more losing positions brings you back to the previous reason we talked about, emotions. It will be much harder to control yourself, and looking at the charts all the time won't help either. You can also miss out the great opportunities looking for those small trades on the lower time frames. Also, you will have more expenses because each trade that you take, even if they come out as winners, will cost you some money. That same profit and even more you can make with one trade or by analyzing one instrument only. For example, you can spend all that time to analyze a certain pair. Let's say that the euro-dollar pair will reach higher values. You can then trade just the euro-dollar pair, entering long positions, and that could bring you much better results rather than spending all that time every day trading the 5 or 15-minute charts. So again, the more you trade, the more money you make is a wrong perception. Working hard and working more in this business doesn't mean to enter more trades, but to do your analysis and be more patient. And the fifth reason is lack of money management skills. This is such a big topic, and there's a lot that I can say about that, and it's probably best if I make a separate video just for this one. We've also got a great money management course because you not only need a trading plan but also a separate money management plan that includes stuff like what are your goals, for how long do you want to keep your positions open, how much to invest, and so on. Then you can move on to the details such as what lot size to use and others. Something that I still don't understand is why would people open a trade with a random lot size, or they use the same lot size without considering that their account balance is changing with pretty much every trade. You should know that all professional traders have their own system to tell them with what lot size to enter each trade. But not knowing what lot size to use shows that you don't have a money management plan and you don't know how much you risk on each trade. And that's how you lose a big portion of your account. Yes, you could make a big profit if the trade is successful, but sooner or later there will be a losing trade. So the first thing here is the lot size, and we find out what is our lot size once we choose where to place our stop loss. If there isn't stop loss, then that means we can't calculate the right lot size. Therefore, we are trading without proper risk and money management, and we are on our way to failure. Based on this money management plan that we would have, then we can have rules for the risk to reward ratio that we will be looking for and the winning ratio that we could expect. And this whole thing is a money management plan, something that very few people actually do, and for those out there who have one, they're not disciplined enough to follow it. You need to understand that you can be losing more trades than you're winning, and you can still be successful if you have a proper money management plan, because the pips you make in a trade don't define your result. There's ways to make more money even if your trade doesn't go as good as expected. That's why I say there's a lot to talk about on this topic. And if you want to see a separate video, make sure to write it down in the comment section. In the next video, we will see another 5 reasons for why people fail in trading, and we will go through each one of them again. One of them is about the indicators that are available to us. So if you want to see what exactly it is, as well as what are the other reasons, then make sure to subscribe to our channel and ring the notification bell so you don't miss out our future content. Also, if you found this video helpful, hit the like button and write in the comments down below whether you've ever experienced any of these emotions when trading and which is the one that you struggle with the most. I wish you all a successful trading. Thanks for watching. Please don't forget to watch our last 2 videos where you can find more valuable information. Check out our channel for more trading related videos. I wish you all a successful trading, and I'll see you next time.